Epstein with the Morning Flash Update. This update is for the morning of Thursday, and we're at the 14th of March, 2024, 8:05 a.m. Central Time, and let's go right to it, because what we got was the PPI number, up 0.6. The market expected it up only 0.3. That's double what they were expecting. Ex-food and energy, up 0.3. They expected up 0.2. January PPI final, the February PPI final demand unrevised at up 0.3. Advanced retail sales up 0.6. They expected it up 0.8. Ex-autos up 0.3. Then they revised January to down 1.1 and January retail sales to a negative figure. So this is snapped back in a positive. Jobless claims, again, it's missed. They were looking for 218. They got down one at 209, and they've taken down the continuing claims. They did some revisionments here. So it's 1811, which is not a very big number considering that they revised the other month down quite a bit, I think 1795. We'll get business inventories at 9 o'clock. We're looking for that to be an increase. So you got a hot number, you got a hot CPI, you would think you'd get a stock market correction. Boy, would that be wrong. You're up 7 points, approaching the lows of the day. You haven't backed off at all. Up 100 in the Dow, up 27 in the NASDAQ. The Russell is the one that is down. The gold market did get hit on this, but I don't know that it's done any real chart damage just yet. The silver market came down and it caught a bid and it snapped back a little bit. Copper's down 2 cents and platinum's down. The dollar up, which is probably weighing on the gold market. And as you can see, bonds and notes, remember, you were just in the 10-year note at the 406, 408 level. You hit this morning already into the 422s. So how's the Fed going to look at this? I mean, I, as an analyst, obviously am surprised, okay, that the market's holding up as well as it's holding up with the CPI and PPI. And the arguments will be, and I know them already, the naysayers will say, yeah, that was the beginning of the year numbers. You're going to see that everything's going to fall as we get into the numbers that make up the month of March, April, and May. That's the only thing that makes sense as to why you're not getting more of a break. Certainly for the stocks, you also do have at work the idea, and I want to use the word, the idea that earnings are so good that they're supporting stocks as well. I can understand that. But if you were to ask me, am I surprised? Exceptionally surprised. Do you trade off surprises? No, you just accept you got that much of a bull market in the stock markets. Other markets reacting, maybe they're giving you the chance of entry on this point, because if this doesn't budge, some of these are getting too cheap is probably the way to look at things. I'll be covering that in just another 30 minutes or so as I get into my morning Spider ETF video. I typically do that at 9 in the morning, and that's about, from when I'm recording this, maybe 45 minutes. And the rationale there is I like to get the reaction in the futures all the morning, economic data in, and then we start approaching that market and go after it in those ways. We cover a whole slew of markets. I'm forever rotating these different names in there. And we try to give you the weekly, the daily charts, where to enter, the reasons to enter on a chart basis, where the stop should be, profit objectives, so on and so forth. So I invite you to try that. How you do it is you go to our website at iraepstein.com. And under the word research, everything you need is right there. You can see this right through there. You can click the icon up here as well. I'm Ira. You have yourself a good day. I'll catch you at the end of the day with the market wrap-ups. Surprise. Take care.